I am forecasting gold for this cycle. I call it pre-bust, meaning it's probably by the end of this year, of 4,000. I had a
Wow.
I had a forecast of 3,000, raised it to 3,400 sometime mid-year last year, I think, and then raised it to 4,000 when we were at 2,500. And or no, at 30, I think when we were at 3,400, I raised it to 3,400 when we were at 2,500. So, so I think 4,000 is a target pre-bust. Post-bust, I think gold can go to 20,000. And silver, I have a pre-bust target that I've had for quite a while of 75. Again, end of this year type of thing. And my post-bust target, probably, by sometime 32 or 3, 31, 32, 33, 20, 31, 32, 33. I think silver can get to 500. Oil, I've been the bear on oil through this certainly last 3 years, and before that. I missed the run. I was kind of cautious on oil back in 22 when Russia invaded Ukraine, and I missed the pop that happened in about 2 days to 130. But I got on the bear call there and said this, I'm not, oil's going down, not up. If you remember at that time, this was right in the middle of the invasion, with oil at 130, 120 to 130. You had a lot of calls for oil to 200, 150 to 200. And I was saying, no, it's going back to 85, or certainly back below 100. And then when it got below 100, I lowered my number to 60, or the 60s. I didn't say 60s, 60s. And then I lowered it to 60 somewhere along the way. And I've been there ever since. So when it went to 55, I was the only one out there that was even close to looking for that. And I've said since it got to 55, it overshot my targets. I basically said it's in a trading range now, probably 55 to 70, and we'll go to 30 in the bust. So that's my view of oil pre-bust and in bust. On the other side of the bust, I think oil is one of the huge opportunities. If you can get in anywhere near the bottom of the bust, I think you can make. I was there in the late 70s when oil represented at the peak in 1980, I think. Oil represented 35% of the S&P. What is it now? 4 or 5% less than
Right.
that. So that's what will happen is at the top of the next cycle, not this cycle, the next cycle, it'll go from that 3 or 4 or 5% weighting to being 35% of the S&P again. So oil should be a big part of people's portfolios. And I say oil and gas. I don't forecast natural gas right now because, number one, there's so much of it's weather related. Number two, there's so much surplus that it's hard to know, that it's low and it's not going to take off here. Once you get on the other side of the bust, ultimately, I think natural gas might go to 50. It could go to $1 in the bust. So if it goes from $1 to 50, it tells you what kind of move you're having. And the point is that you're gonna when you print $20 trillion, and every central bank in the world prints proportionally similar, so there might be $100 trillion coming out. People's Bank of China will be doing it. Bank of Japan will be doing it. Bank of Canada, ECB, Bank of England. When $100 trillion coming out, or whatever the number is, you're stimulating with a lag. You're stimulating demand. The demand that's going to be stimulated is going to be more industrial than consumer this time around, because of all the movement around, trying to get out of China, trying to, bring assets home, bring capacity home. It means there's going to be huge demand for commodities, right? So what you do is you artificially prop up or rapidly build up demand because you printed all this money that goes into the system and creates demand for something, whatever it's going to be. In this case, I think commodities. We can't, and you have a finite limit of commodities because to build a new greenfield mine might take you 15 years or more. To go out and explore for oil and gas takes you time. It takes several years to develop a new oil field, et cetera. So we'll be boosting capacity in all the fields we can, all the places we can. But the point is that you're going to reach a point where demand for commodities far outstrips supply, and there's no quick relief of that supply because it takes a long time. We've spent 30 years downsizing our commodity supplies, right? Whether it be for climate change reasons, they limited where you could explore, whether it be because of just-in-time inventories and an economy that was more consumer-oriented. We didn't have, the companies, and they're trying to meet quarterly earnings. They all rationalize their capacity down, and then all of a sudden you get this instant boost in demand because of $20 trillion or $100 trillion around the world. And, the demand changes quickly, the supply doesn't change quickly, and the only thing to give is price, and price goes through the roof. That's from a bottoms up standpoint. That describes the inflation I described from a macro standpoint. In other words, I give you the monetary reason why you're going to see us go from a deflation to 25% inflation, but then you can see it from a bottoms up standpoint in that commodities scenario. And of course, it's not just commodities that go up in price. Goods are going to go up in price because of the rise in commodities. So and you get this inflationary spiral. Ultimately, wages will go up to help meet that inflation too, or help offset that inflation. So that's when you get into a true inflation spiral. Those that saw the inflation of the 2022 period have no idea. What I'm describing is much more like the late 70s and early 80s. And as I say, will probably be that on steroids. Yeah, gold and silver, I like a lot. I think gold and silver in the next cycle probably will be the last guy standing. So, even oil will peel off somewhere along the way, but late in the cycle. Well, I think gold and silver probably go right to the end of the cycle, just like NVIDIA goes right to the end of this cycle. So gold and silver will be they will be competing with oil as the top performers, I think. Certainly the other base metals and things will do very well too. But I haven't forecasted gold for this cycle. I call it pre-bust, meaning it's probably by the end of this year, of 4,000. I had a forecast of 3,000, raised it to 3,400 sometime mid-year last year, I think, and then raised it to 4,000 when we were at 2,500. At 30, I think when we were at 3,400. I raised it to 3,400 when we were at 2,500. So I think 4,000 is a target pre-bust. Post-bust, I think gold can go to 20,000. And silver, I have a pre-bust target that I've had for quite a while of 75. Again, end of this year type of thing. And my post-bust target, probably, by sometime 32 or 3, 31, 32, 33, 20, 31, 32, 33. I think silver can get to 500.